folks, Jackie Shaw here with the do's and don'ts for tax season. When it comes to doing a year-end close, there are certain things that everybody should do and certain things people should never do. Let's start with the never do's. Never go in and reconcile your checking account first and mark it as done and be like, I'm done. That's all I needed to do. No. Go ahead and prep the reconciliation so you know everything's in the database, but leave it open. Finishing the reconciliation for your checking account should be the very, very, very last thing that you do when you're doing your balance sheet review, and everybody should do a balance sheet review. If you don't know how, Brass Jacks has classes. So the thing you should never do is pop in on the second or third of the month of January and be like, I'm reconciling the checking, done, I'm all good. Very bad plan. There are often times when we have to undo reconciliations and redo them. And you're even worse off if you reconcile January and then rush to reconcile February on the 2nd of February and you still haven't finished your year-end close, because now we have to undo 2 months. So just create the reconciliation, check off what's cleared. Ideally, one thing you should definitely do is any old transactions that are not clearing should be investigated and dealt with. Don't carry garbage into the new year. So one of the things that you should do is look into the transactions that are not clearing and figure out why they're not clearing. Are they a duplicate? Were they an error to begin with? Is it a check that got lost in the mail? Do you owe the vendor any money? Are there old paychecks that you need to really give the employees new replacement checks? And there's systems for all of this, because if you have old aging ickiness in your checking account that's from like 2 years ago, you can't just delete it. You can't just void it. You have to know how to do reversing entries. So that's one of the to-dos. You should investigate all uncleared transactions so they're not pushed into the new year, because then the period should be locked. And once the taxes are started, now you can't make changes to the past. You have to leave it as is and do reversing entries in the new year. So one of the to-dos is investigating uncleared transactions. The other thing that you should do is create a tie-out sheet for all your credit card accounts, because generally credit cards do not have a statement that ends on the last day of the month, right? Maybe it ends on the 5th or the 20th, whatever. So what you need to do is take your December statement and get the ending balance and then add in all the rest of the December activity. You would get that from like your online banking. Or alternately, you wait till you get the January statement for the credit card and you create a tie-out sheet that takes the ending balance on that statement and subtracts out the January activity. So either you're taking a balance that was from mid-December and adding the rest of December activity, or you're taking that statement from January and you're subtracting all of the January activity. The goal, either direction, is that you have an Excel document that tells you exactly what your balance should be in your credit card on December 31st, or whatever your fiscal year end is if you have an alternate fiscal end. So you're trying to prove that on the last day of your fiscal year, you had a balance on the credit card and it exactly matches the third-party records, which is the credit card activity, online banking, and your statements. We're always trying to prove that all of our balance sheet accounts are accurate, and we know they're accurate because we're basing it off third-party documentation, meaning someone else's documents, like your bank or your credit card company. Because if we just prove that our information is correct using our information, it's circular logic. We're not really proving anything is correct. So for the credit card specifically, please make a tie-out sheet so that you know exactly what your balance should be on December 31st. And then the next thing is actually comparing it to your balance sheet. And if it's not correct, do the math on what the difference is and try to figure out what it is. Normally what it is a January transaction dated in December, or December transaction dated in January. That's your first sleuthing activity, is do things have the wrong dates? Because everything must be exactly correct at the end of the year, including a $20 purchase that was purchased in December. And remember, folks, we should be using the purchase date, not the posting date. Some credit cards have 2 dates listed. We want the purchase date. That's what we care about. The posting date, that has to do with the credit card company. We don't care about that, right? So make sure you're using the correct dates. That, of course, is important when you're doing data entry in general, because if it turns out your credit card doesn't have the right balance, you might find that there's lots of things you were dating incorrectly. So this might be a lesson in how to date things correctly in your database. Anyway, the do's and don'ts of year-end close. Do not reconcile your credit card first and then think you're done. Prep it, save it for last. Do make sure that you deal with all the uncleared stuff and figure out what's going on and get that stuff cleaned out before the taxes are done. And also do create a credit card tie-out sheet that proves what your balance should be as of the last day of your fiscal year, because you won't have a bank statement or a credit card statement that gives you that number like you do with the checking account. Okay, happy year-end closings, people.